All right, thanks for staying with us, everyone. The Ghana Revenue Authority has commenced a stakeholder dialogue on adopting strategic measures to reverse trends in revenue mobilization under the value-added tax system. Ghana has over the years failed to make significant progress in VAT collection, as it only contributes 20% of the total revenue collected annually. Despite recording a growth of 17% in VAT collection last year, the GRA is engaging stakeholders and experts to find solutions to generate more revenue from the tax regime. Emmanuel Bright-Kweku was at the launch of this year's Tax and Good Governance Month in Kumasi and filed this report.
The launch of the 2025 Tax and Good Governance Month brought together stakeholders including businesses, religious bodies and officials of the Ghana Revenue Authority. The three-day dialogue on tax is part of annual measures adopted by the Revenue Collection Authority to raise awareness and sensitize the public on tax payments. The event also saw stakeholders deliberate on issues pertaining to Ghana's tax system, especially on the value-added tax, VAT. Edward Apente Jamra is the Commissioner, Domestic Tax and Revenue Division of the GRA.
If you look at the African region, we collecting VAT in Ghana contribute one of the lowest. We want to find solution so that come the year 2026, 2027, we can say that yes, we came to Kumasi, we resolved to reverse this, and now our VAT contribution has reached to 30% of total revenue. This is the tax that is ahead of us.
The theme for this year's celebration is Transforming for Impact and Growth, Accelerating Domestic Revenue Mobilization Through Effective Compliance. Speaking on the theme, Acting Commissioner General of the GRA, Anthony Kwesi-Sapong, emphasized taking up compliance measures to rake in more revenue for national development.
What we do know is that there are a number of tax laws in our system, which when we enforce compliance or we voluntarily obey them, will generate the needed revenue for the state development. And therefore, we use this opportunity to encourage and to request all Ghanaians and taxpayers, both businesses and individuals, that in the month of April, which is a tax filing month, everyone must ensure that they file their taxes and pay their taxes, and subsequently continue to pay their taxes as required by law.
Meanwhile, Ashanti Regional Minister Dr. Frank Amakohene has assured businesses in the region of working to resolve import charges and inconvenience experienced in transportation of goods from the ports.
This community in Kumasi, and as it were, forcing them to relocate to Accra with their businesses, because they complain practically that if they clear their ports, their goods from the ports, and you are in Accra, you just move from the port to your workshop. But right there in Kumasi, you go through a lot of checkpoints, and you have to offload and reload, and all the stress you have to go through. I have engaged with the Commissioner General on this issue concerning the National Tax Force when he came to my office. But as he has pledged to work on that for us, we also want to be sure that traders will not take advantage of their leniency and be moving in equipment and items without having to pay your duties among others.
For Joy News, my name is Emmanuel Bright-Kweku.
Well, turning to one of our top stories this afternoon, Governor of the Bank of Ghana, Dr. Johnson Esiama, is urging commercial banks to tread cautiously over their response to the recent policy rate hike. He said banks should be prudent in adjusting their lending rates. The governor disclosed this in a post-monetary policy meeting with various heads of commercial banks, and here's more in this report.
Speaking at the engagement with commercial banks, the governor noted that even though he appreciates the challenges faced by commercial banks and the need to respond appropriately, they should be measured.
Colleagues, we also recognize that the policy rate hike will affect borrowing costs for businesses and households. While the policy tightening will affect funding costs and credit pricing in the near term, the financial system is well positioned to absorb these effects. We therefore want to urge banks to exercise prudence in adjusting lending rates and maintain transparent communication with your clients. Viable businesses should continue to receive support, and tailored solutions should be explored to mitigate the impact on the most vulnerable sectors.
The governor also sought to justify the decision to increase the policy rate to 28%.
As you are all aware, the committee, by a majority decision, raised the policy rate by 100 basis points to 28%. This decision was aimed at reinforcing the disinflation process, which, while underway, remains too gradual to secure lasting stability. The decline in headline inflation from 23.8% in December to 22.4% in March confirms that recent policy actions are having the intended effect.
Dr. Johnson Isiama also highlighted strong growth secured over the period.
On the outlook for the banking sector, let me outline how the banking sector is positioned to support recovery and resilience. Overall, colleagues, we continue to witness broad-based improvement in financial stability, though we remain keenly aware that persistent challenges require our continued and focused efforts. The recent gains in macroeconomic stability following the domestic debt exchange program, the improved profitability of banks, and the structural high liquidity and continuing recapitalization are improving the soundness in the banking sector.
The meeting is part of the Bank of Ghana's strategy to engage critical stakeholders post the monetary policy meeting.
All right, joining me on Zoom, Manager Macroeconomic Research, GCB Bank PLC, Courage Buti. Good afternoon to you, Courage. Why would the central bank governor issue this caution, and what do you make of the timing?
Well, good afternoon to you and your listeners. A lot of things are happening here, right? Yes, inflation is quite sticky and slow, so it's trying to justify the rate hike to try to accelerate that process. Remember, we have an ambitious target of 11.9% inflation by end of the year. Growth is fairly robust, stronger than expected in the program. And so there might not be immediate need for monetary support for growth at this point. So you do everything you can to sump up excess liquidity and support the disinflation process. And then the higher policy rates and an attendant impact on the T-bill lending rates and all that will impact the growth, what you call the Ghana reference rate, and by extension impact lending rates. So there is that transmission. Lending rate is basically the GR plus some risk premium or risk margin that the banks lap on based on the assessment of the clients and all that. But there are a few things also going on in that space, right? Currently, the investment options available to banks are not that much. And so, unlike previously where you go into bonds and all that, now it's just T-bills. And we see where rates are. You can see the trend in the market these days that there is not so much appetite for that. And so where will deposits go? Banks would have to create a space for deposit. And with the economy recovering, with the sentiment improving, it's likely to go into loan asset expansions. And you need to do so cognizant of the fact that costs of credit will be a determinant in whether you can expand your loan book, the NPL levels associated. So if banks are being minded by all of these considerations, I think the play or the competition will be more on pricing. And so I believe what Dr. Isiama is saying is not very different from what C-suite executives are considering at this point. At what price will help us drive our loan book expansion in a balancing the risk between asset quality and then making sure NPLs do not go out of the rule. And that is a fine balance banks must find, given the cost of funds and then the prevailing circumstances on the market.
Yeah, so how do you expect commercial banks to react to this question? Will they follow a gradual approach to adjusting rates?
That's what I'm saying, that it is already a consideration that they must have an ongoing really, and depending on your asset expansion targets and then the competition on the market, you need to position yourself to get the best, if you like, borrowers on your book and all that. So you wouldn't go overboard. And I see this whole inflation, this policy rate hike as something that is more or less temporal. If you see and we expect from April and even May latest that the pace of disinflation would get sharper. And if you get there, you may immediately see a reversal and the 100 basis point hike release. So it is not permanent shift in policy stance, in my view, that should warrant some aggressive pricing to reflect that. And I expect C-suite executives to be minded about these kind of dynamics. And so pricing, I believe, will not deviate significantly from maybe the current levels. If anything, people will be looking to position themselves to win the best accounts on their books.
Yeah, and these C-suites, like you mentioned, have to think about balancing profitability whilst, ensuring that they are, like the central bank governor is cautioning, adjusting rates prudently. What would be the considerations there so that, we don't have potential risks on the financial sector?
That's exactly the point I was trying to make, right? That yes, T-bills seem to be the only option, but look at how sharply rates are falling from around 28% to now just around 15% thereabout. And so if your strategy has been shift a lot to T-bills and make up for and not grow loan book, that strategy is thrown out of the window, right? What is the next thing? It is to expand assets. And of course, every other thing that comes along, transaction banking, trade finance, and all of those, but loan assets will be a key thing. You want to follow policy rates and pricing high and then drive yourself out of the competition, because for every loan you decline, there may be, so long as it's quality, there may be a number of other banks that are lining up to take it, right? So the play will be around pricing such that you can make up for the lower rate on investment by maybe something relatively high. A retail credit for an individual today or a corporate loan today may be around 21, 22, 23% thereabouts. If you're pricing yourself above that, there will be other willing candidates to take it up, right? So if you want to follow policy rates, you probably will lose out on the best client. And those are the considerations I believe will be had. And that is why I say that the impacts on pricing, in my view, if the banks are considering what is happening in the investment space and the need to grow the loan book to make up for the sharp contraction in yields and all that, then the reaction may not be as aggressive. It will be more about trying to compete on price to get the best accounts. And that is what I expect to be the case, especially knowing that the policy rate hike may be something temporal and may be corrected once inflation returns to that clear part of deceleration, as we expect it to be from May.
All right, like alluded to, these concerns by the central bank governor signals perhaps a message about what the outlook for the broader economy is like right now. What indicators should we be looking at in the coming months?
Well, in the coming months, it's good. We see exchange rate behaving in a predictable way. We expect that trend will largely continue. I think the goodwill is there. The budget resonated with people. And I think the interventions around the gold board and others that are supposed to support the exchange rate are also good interventions if rolled out properly. And so that's a positive. You could see there are a number of structural interventions proposed in the budget, and the main driver of inflation in the last few years has been food. You could see programs trying to tackle food. Not that we've not seen some in the past. The difference, I believe, will be in the implementation and how serious we are with it and how that will impact food supply. If all of those shape up and we see industry and we see private sector driving growth as we expect it to be, and then the macros come stable and the fiscal management as we are promised, some form of the fiscal consolidation turns out to be the case, and then we deal with the inflationary issues largely, we should have a sense of balance, stability in the macros that should support every other segment of the economy. And so the inflation problem could be dealt with to a large extent if these things are in shape. It is the fiscal overruns, it's the exchange rate problems, it's the petroleum price volatilities. Those are the root causes of inflation. And then now we have a leg of food price pressures that are driving inflation really. So if the interventions so proposed target these things and are delivered to satisfactorily, we think that the inflation problem should be receding a bit, the exchange rate stability issue should be receding a bit, and cost of living issues will begin to look better, and the sources of pressures would have been dying slowly. and that stability will return for businesses to plan and all that. So optimism is still there. It's now about delivery, all the proposals in the budget, how we deliver them to satisfaction, and then we can carry the market along with us.
All right, I like the optimism. Thank you so much, Courage Botie, Manager Macroeconomic Research, GCB Bank PLC. I appreciate your time on the marketplace. We are taking a short break. When we come back, we'll be discussing SIM registration, reaction from Consumer Advocacy Group, CAS International. Welcome back. Thanks for hanging around. This afternoon, we delve into the politics of SIM card registration, a new government, a new registration exercise. Well, Minister of Communications, Sam Nate-George, has revealed that the SIM registration will commence on the 1st of July. Now, during the press briefing, the minister emphasized his team is diligently addressing efforts to combat misinformation, disinformation, and fraud. Apia Kwesi-Adumako, Regional Director, CAS International, joins me on Zoom. Good afternoon to you. How do you view government's decision to start this SIM registration on the 1st of July? Do you think it will benefit consumers?
Good afternoon, Dara, and your viewers of Joy News. I think that we completed the SIM registration about 2 years ago, and the previous administration made us to understand that the completion of the SIM registration was going to help reduce the prevalence of fraud within the mobile SIM space. However, 2 years down the line, fraud has not abated. It keeps on increasing day by day. I don't know to what extent would this what kind of value would this new SIM registration would be able to do to protect consumers against fraud. As I speak to you now, I know somebody who has been swindled through mobile money SIM fraud close to 2 million Ghana cedis, and even the police are unable to identify the persons involved. So I think that we should also, beyond targeting the SIM, the police should also be resourced in a way to be able to identify people in Ghana, regardless of wherever they are. I mean, the SIM registration is necessary, but it is not sufficient. Right. It needs to be complemented by other cyber security and surveillance that needs to go with it to be able to ensure that the fraud in the system abates.
Yeah, hopefully we'll get some more insights as to how this new process is going to help tackle fraud. I remember 2 years ago under the previous administration when this SIM registration was carried out, there was so much chaos. We are told that this is going to be online. Is there any challenge you foresee, and how do you advise the government to go about it?
Okay, so I think that not everyone is online. When you go to the market, people may have access to internet on WhatsApp, but as to the process of taking a selfie and also having their fingerprint taken by their phone, not many people can do that. So whilst the online is laudable, as it will help the middle class and the upper class, I think that government also needs to have, government can also compare the telcos to have registration hubs, especially in the market and the lorry terminals and churches, so that those who find themselves outside the metropolis of the digital connectivity will be able to get support in having their SIM card re-registered.
Right. I've got barely 30 seconds. I want to squeeze this in because I know this is something you've been pushing, the Consumer Protection Bill. A couple of weeks ago, we celebrated Consumer Protection Day. Where are we at?
So we've not made any progress. It's still at where it was left at the previous administration. just that this year it was captured in the 2025 budget, meaning government is going to allocate resources to the Ministry of Trade to push the bill through Parliament this year.
All right. I will keep watching that and keep advocating. Thank you so much, Appiah Quasie-Marco, who is Regional Director, CAST International. Appreciate your time. And that is The Marketplace. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. There you go, the day's latest stories over there. My name is Daryl Kwaf.